This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Justin Newton of Netki. Justin, thank you for joining us.
Yeah, thanks for having me here today, Hall.
So Justin, what was your background before coming into crypto, and what are you guys doing today?
Sure. So my co-founder and myself spent a little bit more than 20 years before we got into crypto working on the internet and different internet startups. So along the way, we had been involved either together or separately in helping take 4 companies public in 98, 99, 2008, and then just recently. And when we came over into crypto, maybe about 4.5 years ago, what we did is we saw, then it was just Bitcoin, Ethereum wasn't even launched yet. What we saw was, much like the internet was, a network that was open and permissionless to use, and open and permissionless to innovate on top of, that was replacing or augmenting a network that was traditionally closed and permissioned. In the case of the internet, it was the old phone networks. In the case of Bitcoin and blockchain, it's some of the financial networks. And what happened in the case of the internet was that led to a wave of inclusion. Like literally a guy standing in the middle of a field in Africa has access to effectively the same information as a researcher at MIT. And it led to a wave of innovation. I don't think that any of us saw things like Airbnb or Uber or even Pokemon Go coming when we started working on the internet 25 years ago. And probably really relevant to this audience, it led to a wave of value creation. If you look at the companies that were the traditional guardians of the closed permission networks, the phone companies, the vast majority of the services they actually sell to customers today are these data services that are related to the open and permissionless networks. That said, the vast majority of the value creation actually happened outside those companies. It happened at Facebook, at Google, at Apple, and at all these other places. So our belief was, when we saw Bitcoin and then later blockchain, that the same thing was going to happen here. That there was going to be this wave of innovation, inclusion, and value creation. And so what we tried to do was to think about, if this is the case, well, what are some of the key enabling technologies that need to get developed in order for this technology to take off? So that's how we got here.
Great. And so you're at Netki today. What do you guys do there?
So what we do is we help companies that are operating in this space, whether they are crypto exchanges or platforms like that, or OTC desks or hedge funds, or token sales or ICOs, to automate their customer onboarding for know your customer, anti-money laundering, counterterrorism financing, accredited investor validation, and all that stuff. So when you're going in and opening your account and you need to submit all that documentation, we can help make that process a lot faster and easier, both for the investor as well as for the company.
So the blockchain space is evolving very rapidly. It's very different now than it was even a year ago, and especially 3 or 4 years ago. How do you see the industry evolving currently? What's going on, and what do you see coming up in the next 6 months that we should be looking for?
Yeah, well, I think that if you looked back 2 years ago and look forward to where we are now and what's coming in the next 6 months, I think the most drastic change that has been and is continuing to go forward has been this embrace of more regulated markets. If you go back to crypto roots, doing things that would make the SEC or other people happy wasn't necessarily aligned with where the industry was going. Yet today, if I look at what's going to be most exciting in the blockchain space over the next 12 months in the crypto space, in terms of what I would be looking at as an investor and a technologist, it's what's happening with security tokens. Because the moment that we can bring the securities market more online through these blockchain-based platforms, it gives, well, the most important thing is it gives companies access to pools of investors that traditionally have not had access to good investments before. And similarly, it gives investors in many parts of the world access to high quality investments that they previously haven't had any access to. I think from both sides, that creates financial opportunity that can be kind of transformational to those markets and also create a lot of growth and opportunity for the companies that are operating in the space.
And so the landscape for investing is changing quite a bit with the move to securities. What do you see happening there for the investor as far as making investments into these blockchain applications?
Yeah, so I think a few things we're going to see happen as a result of security tokens. One is, as I just talked about, it is going into a regulated space. And so you're going to see the issuers of these tokens needing to be focused on compliance around the entire life cycle of the token. So what that means is in many cases, if they're taking US investors, they're going to have to be accredited investors. There's likely going to be restrictions around how those tokens can trade. If you think of a traditional like private equity or private security, there's typically legends around that security where it might say that the security can't trade for a year, or that it can only trade to accredited investors, or that it can only trade to investors from outside the US if it's a Reg S, et cetera, so on and so forth. And as the issuer of that token, you need to ensure that there are appropriate controls around the secondary market as well as initial issuance of that token. And so what you're going to see is even in a decentralized world, these security tokens are going to trade and act very differently than the way that utility tokens act today.
What do you think about some of these new concepts around tokens like stable coins where the value never changes? Do you think that's an answer to getting away from security tokens and back to the utilitarianism, or do you think stablecoins is not really going to achieve that at all?
Well, I think they're solving different purposes. A stablecoin is really giving a way to give something more like fiat currency some of the advantages of crypto. Or similar, I'd say it's giving crypto a way for people to take advantage of the assets of crypto and the values of crypto without having to deal with the fluctuation risk in the price of the underlying asset, right? There's some people that are invested that are buying crypto for reasons other than speculative investment purposes. And for those people, the stability itself is a function. I think security tokens provide a really different use case. Security tokens basically takes the multi-tens of trillions of dollars of the global securities market and allows it to be moved onto the blockchain as a tool to provide greater transparency and liquidity. So I think that stablecoins have an opportunity to be successful. I think that the different models of stablecoins have different risks and opportunities around them. So I think that if you're going to hold a lot of value in stablecoin, you should make sure that you understand what the risks are of the particular stablecoin that you're holding value in, and that you're comfortable in taking and holding that risk. That is a risk that you're taking where you don't have investment upside, right? So it's a risk just to offset your other downside risks. So I would definitely make sure that you look at that as you're thinking about stablecoin use, because I think that we'll probably find that many of the stablecoin models that have been proposed, particularly some of the algorithmic ones, are likely to find out that they have challenges when they reach some real world situations and stress tests.
Well, for our investors out there, what would be your advice for investing at this time? What investment thesis should our investors be applying given where we are with the growth of blockchain and the role of the SEC?
Cool. Yeah, so there's a few things that I would be doing as an investor today, and I want to say this: I'm a technologist, not an investment supervisor, or an investment manager. So take any of my advice for what it's worth. But if I was looking at things today, what I would say is that we are at the very, 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 very early stages of crypto. And if I was to think about it in the internet timeline, I would say that we're maybe in like 1998, right? And if you look at kind of what happened in 98 and 99 and early 2000 on the internet, they would say that at the time that those stocks were in a bubble. I would argue slightly differently, which is that if you look at the value of the internet services today, it's so dramatically higher than what the internet marketplace was valued at then, that it wasn't so much that things were inappropriately valued. It's that some of the valuations were a little prospectively too early, and that in many cases, people had invested in the wrong things. However, there were a few kind of bellwethers or real powerhouses in the ecosystem, an Amazon or people like that, who had you invested in them, then you would have done quite well, even through today and through all the other trials and tribulations. What that would tell me is if we're seeing the same thing here, you should potentially, you should look at the investments in crypto startups as speculative because we're in the early phases of the industry and ecosystem, and the same of early protocols. We're in the speculative phase. There's a lot of learning that needs to happen. And much of that learning isn't going to happen until these things get into production. And we may find that many of these projects have fatal flaws when they really hit the real world. On the other side of that, there's going to be a small handful of things that turn out to be the real winners that are immensely valuable around the long term. So stuff that I would look for today is I would look for things that feel like they're practically achievable, that they have a reasonable go-to-market strategy where that in order to be successful, they don't have to start out with the entire world using them. It's something that works well for a small number of people as well as a large number of people so they can get to a large number of people. I would be looking for teams that have had a history of success and achievement. I would be looking for early metrics around real engagement and use of the platform. And I differentiate that from engagement and use of a Telegram feed, because being able to get people excited about something is different than getting them using it. And using it, I think, is much more valuable. And I would say don't invest anything in crypto that you're not willing to lose. Maybe leave it at that.
Well, that's good advice. These it can all go to zero at some point for sure. But
it won't all go to zero, but some things will.
Some companies will, although I too believe in crypto. I think it's the long-term winner. It's just going to take some time to get there, and there'll be a lot of failures along the way. And
agreed.
And you work with a lot of startups too, and you must see the challenges startups face in navigating this blockchain world as well. What do you think are some of the unique challenges startups are facing in order to get their product through the system and out onto the market and into a successful raise?
Yeah, so one of the biggest challenges that comes up in this environment has to do with both the number of regulatory jurisdictions that you need to deal with and the complexities of how they interact and interweave with each other. And then also the number of places that your investors or donors or customers are coming from. What that means is when you're going out and you're doing your fundraising, you actually need to have some understanding in advance of where your investors are going to come from so that you can ensure that your compliance tools and your compliance policies are written in a way to deal with those use cases. So, for example, one of the advantages of a platform like ours is we support IDs from close to more than 185 countries, like over 3,000 ID formats. But in the absence of something like that, if you're going to have investors from all over the world, you need to have some way to be able to not just read the information off the IDs in all those different languages and formats, but also a way to actually tell if the ID is real by checking security features or other information about it. So that's like one example of complexity. Similarly, different jurisdictions have different rules and laws. And so if I onboard a customer from the EU, that they may have different requirements around what data I capture, what data I store, how long I store it for, and what documents the customer needs to give to me, compared to if you did exactly the same thing for a customer that was in the US or a customer that was in Singapore. So again, you need to be prepared to deal with that jurisdictional complexity. That's not something that comes up if you're doing like a chat app, right? Or something like that, but is because you're dealing with money and finances. We've seen some companies that have not taken the time to really investigate that well up front, that have literally changed jurisdictions that their company is technically based in 3 times from when we started talking to them until they actually got to their token sale, because they would start going down the path and they would realize there was some roadblock they hadn't anticipated that basically prevented them from moving forward in that jurisdiction.
Well, it used to be when you did a startup, you basically built it for the U.S. market. It was the biggest, one language, one currency, and so forth. And you went international later when you were more prepared for it. But with the blockchain solutions coming out today, it seems like we're going worldwide on day one. And so we have to deal with many more issues than we did in the past. And it just seems like it's just much more complex issue than it used to be to go launch a solution, because it's got to integrate with everything. It's got to work everywhere, because now your users and your investors are worldwide. They're not just in Silicon Valley, or they're not just in the US anymore. They're everywhere.
Exactly that. Yeah, exactly that.
So that was kind of a subtle thing. I think one of the reasons Bitcoin did well was it was now one way for everybody in the world to participate, because you didn't have to go through rubles or yuan or dollars or whatever. It was this other thing that let everybody participate. But then the counter to that is you now have to deal with everybody too. And now you have investors around the world that you have to keep updated and so forth. So that it just took the whole thing from a country to a worldwide scale in one go that I think people are still grappling with. Certainly on the security side, they're still grappling with that, or the regulatory side, they're still grappling with that. But the other side of it is all the other things that come with that, languages and local issues and other applications, requirements are coming into it that make it so much harder to start something these days.
Yeah. On top of it, when you're taking your investment in crypto, your source of funds research becomes a lot more complicated, right? Because if I get a payment in terms of a wire from Chase, I have some level of comfort that Chase has run it through some AML checks and other things like that. If I get $100,000 that shows up in crypto, or a company that gets $100,000 that shows up in crypto, they need to figure out where that crypto came from, that it, wasn't payments on a dark market or otherwise kind of a challenge. It needs to get treated like someone showed up with a satchel full of cash, which has much higher compliance requirements in terms of the amount of diligence and research that needs to be done on the source of funds than if someone shows up with a bank wire or a check or something else that comes through a regulated financial institution.
That's a good point. Well, in the last few minutes we have of our interview today, what else should we cover that we haven't?
Oh, man. Let's see. The thing that I would tell you, and I think I covered it really briefly, is that, we're still definitely in the very early innings of what's happening here in blockchain. I did over 20 years of internet startups, and I can tell you based on what I'm seeing here that we have decades of building ahead of us. And so the thing that I would say that I tell to technologists, I tell to business people, and I tell to investors is I know that there's been a lot of activity and noise in this area. And you may think that if you're coming in now, you're too late, but I guarantee you that you're still early. So you can get yourself educated. You can take a look at what's going on. You can come in. You don't have to worry that you got to the party too late or that you have to rush to get into the door. We're still in the very, very early innings of all this.
Absolutely. So what's the best way for the audience to get back in touch with you?
A really easy way to get in touch with me is over Twitter, where I'm at Justin W. Newton, Justin, the letter W, Newton. Would be a great way to get in touch with me. Yeah, let's do it there.
All right. We'll add those to the show notes and make that available. Appreciate your taking time to share your thoughts with us today, and hope to have you back for a follow-up soon as well.
It was fantastic to talk to you today. Thanks all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.